How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now we are off to a great start this week with investors parsing right on through earnings reports. And of course, we are seeing a lot of profits across the board, allowing for all three composites to rise on the week. The Dow Jones up by 1.5%, the S&P by 1.6%, and the NASDAQ up by 2.2%. Now my personal account is following right along as it's up by $1,593.45 on the day, bringing my account total to $90,697.28. Now as for today's video, with our concerns still being on that multi-year inflationary high, I want to talk about three dividend investments that we can make that are actually within the real estate sector, those being REITs, real estate investment trusts, the ideal hedges against inflation during these high inflationary periods. So with that said, let's go ahead and jump right into today's video. But before we do, tap on that thumbs up button. Of course, if you haven't already subscribed, make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. Now YouTube, let's go ahead and dive right in. Now, I'm excited for today's video because we're going to be talking all about real estate and more specifically, real estate investment trust. Aside from YouTube, that is the industry that I personally work in. And honestly, there is no better time to be working in real estate than a high inflationary period because let me tell you something, business is booming. Now, I want to take you back to 2021 where the real estate sector actually rose by 46.2%. It did absolutely incredible over the course of the year. And that is because of high inflation. Now, ultimately, during high inflationary periods, real estate is the exact type of investments that you'd want to get into. Now, looking ahead into 2022, of course, we are just seeing inflation continuing to rise and therefore making real estate, again, just an ideal investment for us all, providing for higher yields, better values, stronger growth rates, and solid profitability, all making for real estate to be the perfect hedge against multi-decade inflationary highs like we are currently experiencing. Now this all leads me to the very first REIT, real estate investment trust, that I want to talk about, which is Essential Properties Realty Trust, ticker symbol EPRT. Essential Properties owns, manages, and continues to acquire primarily single-tenant properties leased to middle-market companies. They were founded more recently in 2016. However, given they specialize in long-term net leases, which essentially requires their tenants to pay for some or all the taxes, fees, and maintenance associated with the properties, therefore allowing Essential Properties to become extremely profitable over the years and enabling portfolio growth with 1,397 current properties under their belt and a market cap sitting at $3.36 billion. In terms of reliability, Essential Properties has some of the most notable names on that tenant list of theirs, from Taco Bell, McDonald's, Arby's, and Marriott, with nearly 14% of their portfolio dealing in childhood development centers, 11% of the portfolio in medical facilities, and another 11% dedicated towards car washes. Now, ultimately, amidst all this recent volatility, Essential Properties did come down off that 52-week high of theirs from $32 a share, where it now sits around $26 per share. That is creating about an 18% change, an opportunity for all of us to catch the rebound. And in terms of their PE ratio, it is actually hovering around a low for real estate investment trust at 32.24. In terms of their future, analysts of course see a rebound in sight, but even continued growth, coming in at a median stock share price at $30 per share and a high stock share price at $36 per share. And ultimately, as we're here for their dividend, Essential Properties has a dividend yield at 4.05%. Next up, I want to talk about a REIT that you're probably much more familiar with. It is W.P. Carey, ticker symbol WPC. Now, W.P. Carey was founded back in 1973. It's a much larger net lease solutions REIT that invests primarily in single-tenant warehouses, office spaces, retail centers, and self-storage spaces. All in, they're an $18 billion diversified commercial portfolio totaling 1,266 properties, both in and outside of the United States. And with 37% of their portfolio actually in Europe, such exposure allows for W.P. Carey to play around with lower interest rates, which are then arbitrage against rising rates here in the United States. Since W.P. Carey's founding, they have certainly come a long way, generating a market capitalization at $16.32 billion. And over the last handful of years, they have actually been trending upwards, which is all a very healthy sign. Analysts only foresee continued growth, coming in at a median stock share price at $87 per share and a high stock share price at $91 per share. So again, here's an opportunity for us to jump in on WP Carey, pick it up before it actually reaches some of those highs, and just collect actually on their dividend, which is at a current dividend yield of 5.08%. Now their PE ratio is a tad higher here at 38.07, which of course is not ideal, but in these market conditions, I would say it's still a strong buy and a great hedge against inflation. And last but not least, I want to talk about a real estate investment trust that is rather niche. It is Life Storage Incorporated, ticker symbol LSI. Life Storage Incorporated focuses on acquiring and managing self-storage facilities. The benefits of such a niche market allows for low capital and operational expenses, increased cash flows, and wider operating margins, which ultimately, in the case of Life Storage, has had them in the game since 1982, doing it very well year over year. Currently, they have over 1,000 plus locations in 35 states, as well as properties in Canada for added diversification. Now, their market capitalization is currently sitting at $12.44 billion. They are actually down from a 52-week high, falling from $152 down to around $147 per share, which is about a 3.2% change. In terms of their PE ratio, it's rather high at 46.5. However, with supply chain issues coupled with labor shortages, Life Storage's occupancy rates on their warehouses as well as rental rates have actually remained very high, which only gives way for analysts to see a rebound and then continued growth, coming back to a median stock share price at $154 per share and a high stock share price upwards of $204 per share. So a lot of growth in their future. Now, until it reaches that stock share price high, we could just kick back and collect on Life Storage's dividend, with their current dividend yield coming in at 2.75%. Now YouTube, that is it from Essential Properties, WP Carey, and Life Storage. I want you all to take a look into these three REITs because they are definitely hedges against inflation during these high inflationary periods. We want to make wise investments for our future. Now, if you like what you heard, you learned something new, drop all those comments below. I'd certainly love to read through them. If these REITs are within your portfolio, if you're planning on investing into any of them or all three of them, do let me know. And of course, understand that I'm not a financial advisor, so just make sure you do your own due diligence prior to making any investment decisions after my videos. Of course, tap on that thumbs up button and help me grow this channel. If you haven't done so already, subscribe to the channel. I'd love for each and every one of you to be on this journey with me. And until the next video, YouTube, I will see you all there.